And we're in that time of the year, July, August, September, October, where that kind of correctional process is usually in play. So this may be just kind of all playing out to normal seasonality, a bit of de-risking going into the election. So let's talk about what you need to know before the bell this morning, because that's what everybody wants to know is what happened yesterday. We've gone roughly about 350 days without a 2% correction. Finally got one yesterday. Market was down about 2.3% yesterday. The market did break through the 20-day moving average, came back down and tested the 50-day. In today's market commentary that's on the website this morning, we talk a little bit about this. Again, we noted yesterday we're on a sell signal. Again, that is certainly putting pressure on the overall market. We've talked about for about a month now, a little bit more than a month, we're due for a 3 to 5 to a 10% correction. We're in that process. Now, whether we're going to continue that correctional process or not is yet to be seen. The market is now sitting right on the 50-day moving average. If the market can hold here, rally back up, clear the 20-day, we'll go back and retest highs. This correction will be over. If we fail at the 50-day moving average, we're going to come down and test the 100-day moving average. Now, if we go back and look at April, it's exactly kind of the same layout we had in April. The market was well extended, and back then we were talking about, hey, we need a 5 to a 10% correction. Market came down, broke the 20-day, just like we did a couple of days ago, rallied back above it, thought the market was okay, then we broke back down, cut right through the 50-day moving average. So again, same thing here. Rallied a couple of days above the 20-day, broke down, we're sitting on the 50, very close to kind of what we saw previously, and then the market went on down, tested the 100-day moving average. Right now we've got downside to about 51.78 on the S&P, so that'd be about a 5-6% correction by the time we get there. So again, pay attention to that. We're on sell signals really across the board. So again, it does suggest further weakness, and we're in that time of the year, July, August, September, October, where that kind of correctional process is usually in play. So this may be just kind of all playing out to normal seasonality, a bit of de-risking going into the election. Talking about a couple other markets real quick. Emerging markets, it kind of got a big jump with small cap stocks. That's given all that back up again. So again, that shift to other stocks outside of mega caps worked well for a moment, and then now has had a pretty big decline. Sell signals here across the board as well. International markets have broken down back below their moving averages as well, back on a sell signal. They didn't really get a whole lot of activity with the rotation in the market, but those are breaking back down again. Small cap, mid cap, looking at the Russell 2000, is still doing well at the moment, but it is starting to peak here. We had this little brief rally where it grossly outperformed, got a lot of attention, really outperformed the large cap index, but has peaked at that level, has been unable to get back above that level, still overbought here, kind of on a standard deviation basis above the 50-day moving average, beginning to trigger sell signals. So we may see more of a reversal in that small cap, mid cap trade. So don't forget to take profits, because as we talked about earlier this week, these companies are still challenged on a profitability basis. And if earnings are slowing, and if Google and Tesla and these other big mega cap companies that were the growers of earnings, if we're seeing earnings deterioration in those companies, it's certainly going to kind of roll down the list because the economy is slowing down overall. Outside of that, the other big news yesterday, Treasury yields took a pretty big jump. Again, yesterday was a big liquidation across the board. We saw stocks, bonds, everything kind of get liquidated yesterday. So yields had popped back up, but we're still within this downtrend. We had kind of talked about this previously, that we're just in this downtrend in yields. And so again, just kind of bouncing along this downtrend. Again, a big pop in yields yesterday, but really it was kind of just a market unwind yesterday, really not anything news driven to any consequence, just pretty much a de-risking of portfolios across the board yesterday. So we saw yields pick up here as well. There is some more potential upside here to the top of this trend channel. Could get back up to about 4.33, 4.35 on the 10-year Treasury yield. So again, there is some upside here on yields, some pressure on bonds potentially. But over the course of the next few weeks, we're going to work through this correctional process, likely be back into a good buying position. So again, as we get ready to head into the end of the year, but it could be choppy for a couple of months. So again, we took profits earlier last week. Suggest you do the same, risk manage your portfolio a bit. Don't be overly negative right now. No reason to. We're just through a normal correction process. This will be a buying opportunity unless something else comes up. And right now, we just don't see it. That's what you need to know before the bell this morning.